Boom! What's up, Waves Capital? It's Royce Jacob, and welcome back to the channel. In this quick video, I want to talk to you guys about why banks collapsing and the crises that we're currently experiencing in the banking sector could actually be good news for the equity markets and ultimately lead stocks higher, okay? The same goes for crypto as well, all right? So to do so, I simply want to read over the newsletter that I wrote for the portfolio and newsletter group this morning. We go over the banks and again, why this banking crisis could be good news for the markets. And that is, of course, primarily due to the reaction the Fed will take to this. Okay, so I'll quickly read over this at the very end. Of course, I do want to talk to you guys about how I'm personally structuring my portfolio right now and why I'm maintaining a bullish positioning in my portfolio. But I really want to talk to you guys about this. I didn't decide that I would sit down to record this video until probably like 5 minutes before actually doing so. But I felt that this was a very important principle for not only the newsletter members to understand, but for all of us to understand. Because when it comes to the macro and to how the fundamentals of that macro affect the markets, this is really at the core of it, okay? Don't fight the Fed. Fed rules all, interest rates rules all, and ultimately, this could be very, very good news for the markets, although it's bad for the economy, okay? So, once again, we will read over this pretty short newsletter, and once we do that, wrap it up with some portfolio talk and call it a day. All right, so we're halfway through the month of March, and so far, it's been a wild one. I'm sure you can all agree with that. We've got another one down. Last week, we saw one of the largest regional banks in the country, just Silicon Valley Bank, collapse. And today, another major player in the industry has found themselves in trouble as Credit Suisse, which is down 25% today, was forced to make their financial troubles public. Banks experiencing such crises and contagion effects is troubling news for the economy, no doubt. But as I've said previously, when it comes to the macroeconomic data such as this, all that matters to Waves Capital is the impact that it has and will have on the markets. The market is not the economy. I've said that many times before, and I'll say it probably many times in the future, including right now, present. The market is not the economy. It's a precursor to the economy. The market can be ripping while the economy is in shambles, and that's because the stock market in its nature acts as a futures market. The major silver lining to this banking crisis is the fact that it will very likely encourage the Fed to hit the brakes when it comes to raising interest rates. If the Fed pauses rate hikes at the FOMC meetings next week, which do take place next Tuesday and Wednesday, so mark that on your calendar. Next Wednesday is going to be a big one for the markets, okay? The results of that meeting will inevitably have a massive impact on general direction, whether that be up or down, but it will create for volatility. So again, mark your calendars the 22nd. If they pause rate hikes, the markets will rejoice, okay? That will be huge news for the bulls. And if the Fed even mentions, if they go so far as mentioning anything about potentially lowering interest rates and reversing course, then the markets will go completely berserk, you guys. Pretty much everything will go parabolic. The bulls will be rushing, okay? So just take that as a note. That is very optimistic thinking for sure. And I do not want to guarantee that this will happen at all because the statistical likelihood of that happening is actually pretty low. But it is a possibility given what we're seeing with the banks. And once again, that is the ultimate silver lining of this bank crisis. Okay, so only time will tell. But to me, these bank struggles are encouraging to see. The more the economy struggles, the more bullish I become on the markets. And that's because this is exactly what the Fed intended to accomplish. Okay, so as soon as the Fed began raising interest rates, you guys, their primary intention was, of course, to tame inflation. But to do so, they had to crush the economy. Okay, they wanted economic pain. They wanted consumer demand destruction. And right now, what they're saying with the banks, and really the primary reason that Silicon Valley collapsed was due to some poor financial instruments that got absolutely destroyed as interest rates went up. But the Fed realized that, and they recognized the fact that, shit, like if SVB had these, and they're one of the most sound, not most sound, one of the largest regional banks in the country, 20th largest bank overall in the country, I think. If they're that overexposed to financial instruments that completely degrade when interest rates go up, there's probably a whole lot of other banks out there doing so. And that's really the underlying reason that they stepped in to aid that SVB situation, was because they understood that they really catalyzed it in the first place. Okay, so again, the Fed, probably feeling a little bad, a little guilty right now. So hopefully they step in. This is their opportunity to be the heroes after so long, just being the freaking villains. And everyone wants to be a hero. So they see the economy struggling. They'll stop raising interest rates and maybe even reverse course. And if this is the case, you guys, if they stop raising, and really once they stop raising, it's pretty much inevitable that a reverse of course is on the horizon, or lowering interest rates. Even if it doesn't come until 2024, if they stop raising, that's a strong step in the right direction. And once that happens, the never-ending party that is the long-term bull market can officially resume. So of course, you guys, if you look at the S&P 500, the NASDAQ, pretty much any tech company or chart, over the long run, it goes up and to the right, right? The past year or two has been very volatile. That's obviously due to the major rallies that happened in 2020, 2021, followed by rate hikes. So that's a perfect storm for disaster. And right now, we're just waiting for those rate hikes to stop so we can focus on a reversal of those rate hikes on the horizon. And ultimately, again, the stock market is a futures market. It's a precursor to the economy itself. And once that happens, we're back to the races. So that's the rationale that led me to sell all of my put options this morning. So just for full transparency, I did sell all the put options I had this morning on SPXL. I'll just give you guys that, which is a 3x bull ETF on the S&P 500. Those things were up, I think, at the time of sale on the day, they were up about 250%. And, there's no better feeling in trading than using put profits to buy calls. So for full transparency as well, I put all of those put profits in two more AI calls, into some plug power calls, and I'm really stoked, as you can see here in price targets, which is the next newsletter. This is an example. I always upload the newsletters from the past few days onto the curriculum. So this is what a price targets newsletter looks like, where we cover daily charts and daily price targets, obviously, hence the name. But you guys, our meta calls are absolutely printing. Unfortunately, our C3 AI and Veritone calls have been a bit stagnant, a bit sleepy lately, but I trust those things will wake up. And right now, I lean very bullish, and I'm so excited for what's to come. Although the past couple of weeks, again, especially coming out of such a strong February, like January, February, the past couple of weeks have been tough. But get you guys, hardship builds character. That's the nature of the beast. And if you can't take the heat, you got to get out of the kitchen. If you guys want to trade with me on a daily basis, if you want these daily newsletters that I spend pretty much all my days writing, then that's the first link in the description box. If you guys want to join Waves Capital for real, my complete portfolio daily newsletter, get a full breakdown of my entire personal portfolio, every single call option, put option, stock position, crypto position in my portfolio, which is updated every single trading day during market hours. And again, with the trade analysis, with the price targets, I rationalize my thoughts and let you guys know what I'm thinking on the horizon when it comes to potential profit taking. Okay, so if you're interested, once again, first link in the description, $15 a month, $40 for every 3 months. You can even try it free for 7 days. And if you don't like it, just peace out. It's that easy. But I trust you guys will be sticking around, and I look forward to seeing you on the inside. So appreciate it if you join. If not, I appreciate you watching this one, and I'll talk to you guys in the comments down below about whatever you're thinking about this whole bank crisis, and let me know what you think its impact will be on the markets. All right, so catch you downstairs in the comments. Newsletter members, I'll catch you right after I wrap up this video. And until next time, always remember, take action, make waves. Peace.